It's just Tuesday, but it's a mega week for financial events here in the season. Certainly one to talk about here. Our top stories this morning. Caution in these markets after the U.S. stock rally hits the pause, with the Fed's preferred inflation gauge staying elevated. The yen is close to prior intervention levels and approaching that 17-month low. China's renminbi in focus as well, advancing after Monday's signals of central bank support. We're going to be live also at the Boao Forum, watching for any signs of new policy initiatives. Plus, big interviews coming out from the Milken Global Symposium as we talk to leading market players about their top investment themes.
Thriving together, bridging global markets is the theme for the first ever Global Investment Symposium, Milken Institute, of course, here in Hong Kong. So we've just begun, of course. People have just started to flock in, Yvonne, into the main sort of hallway here in terms of where we are going to get started. In fact, just now, right before we came on air, and just in case, of course, some of our viewers caught a little bit of backstage commotion right now, Paul Chan, Financial Secretary, in fact, just actually walked by and came over to say hello and ask him, there's an empty seat for you here, just in case. We'll keep that warm. In any case, of course, lots of other good conversations coming up here. We've curated, really, I was talking to Belle and Heidi in the earlier show, we've curated the conversations we'll be having here on the ground for our viewers right now. So a couple of things, right? Where's the Chinese consumer? Jane's son, who's standing by a couple of meters from where I am right now, really what forward bookings look like, and their business actually did exceptionally well in 2023. So both the business and really what it means for the industry. Two good conversations coming up in private markets, so private credit and private equity. Private equity, of course, the focus in real estate with Gulf Capital. And Hillhouse, of course, joins us later on in the show to talk us through all things private credit. Is it getting too crowded? Are we going to see downward pressure on fees? And, of course, we'll be talking allocations to China. Where does that stand as far as things like pension funds are concerned? So stay tuned for all of those things, Yvonne. Yeah, go ahead.
Yeah, it's a busy week, as we talked about, right? Who needs Taylor Swift when you have all these financial leaders coming to the city? You have Milken, you have Wealth for Good coming up this week, you have the One Earth Summit. Then to wrap it all up, you want a bit of culture, we also have Art Basel a little bit later on as well. So certainly there's a lot in focus. Christopher Hui from the government, the Treasury, when it comes to financial services and the like, is going to be joining us in the 10 hour as well. All right, here's a market setup, though. It's a slow day, so good to talk about Milken here, obviously here. But we are obviously seeing, when it comes to this U.S. equity rally, we've taken a bit of a breather here as well. So we're not seeing a whole lot of appetite, although we're catching a slight bit across equities here today. Japan slow, though, but you are seeing the Kospi up some 1%. Taiwan's coming online and seeing a bit of a gauge here. Really seeing some appetite coming through back into Taiwan. It's interesting, right? When it comes to the FX side of things, that PBOC fix yesterday, plus one of the first salvos that we heard from Japanese officials on the yen, seemed to have at least brought FX vol a little bit lower here, at least putting a floor. So that's why you are seeing not a whole lot of movement with dollar yen. We're still trading around 151. Bank of America had an interesting note saying, look, you got to watch 152 to 155 range. That could be the zone where we could be seeing some sign of intervention here. And we're watching very closely some of the proxies of the renminbi, just given the rebound. We've clawed back from some of the losses from Friday. The Aussie dollar clearly has been a beneficiary of that. Yields are slightly lower here this morning, but obviously, just given what we heard from Raphael Bostic, the Atlanta Fed head, they're talking about, look, one cut for 2024 only. Certainly, we did see yields pick up overnight, stabilizing a little bit here today. We were flat on the Golden Dragon Index overnight as well. So in terms of what the setup is looking like here, not a whole lot of direction, but futures are pointing to this here right now. Obviously, we've been talking about the renminbi moves. We're pretty slow going when it comes to futures. 231 for your Chinese 10-year yield and 724. We're just below 725. That fix is going to be very, very important here today because we are still trading around the weaker end of the band when it comes to dollar China, David.
Yeah, which is why the anchoring for today, do we get anchoring? Do we get a little bit more give out of the PBOC? And we are extremely close, of course, as Yvonne is pointing out, to the weekend of the trading band. It's been several weeks since we've actually seen the onshore rate move towards 2%, of course, up that midpoint as well. We talked about how we're big on conferences today. I'm here, of course, at the Global Investment Symposium, the BOA Forum. We're waiting, of course, on the Chinese Vice President Han Zheng, of course, to be speaking here today. In terms of economic data, trade numbers coming out of Hong Kong later, that's towards the end of the day. And give or take, I would say in about an hour or so, the latest thinking from private economists on really what growth looks like, inflation, and all other key economic metrics should be coming out, Yvonne, in the next hour or so. On top, of course, of other things. I think earnings are also very much in focus.
Oh, yes. You take a look at that board right there, right? And some of the biggest heavyweights that we see are going to be reporting results today. BYD certainly is one. Nongfu Spring, Anta Sports, Qingdao Brewery. So some of the consumption plays, obviously, and also the brokerages as well with CITIC Securities. We're going to be counting down to a lot of bank earnings for the rest of the week as well, with China merchants coming out with that surprise dividend as well. So certainly could be something that could move the stock here today. But yes, we're talking a lot more about diplomacy, what we're seeing with these big events, not just here in Hong Kong, but also in China, where the mainland is talking up the economy this week as it hosts several events with foreign visitors, including company executives. One of them is the BOA Forum for Asia that starts today. Let's bring in Stephen Ingles, our chief North Asia correspondent, joining us now live from Hainan. Steve, you've covered this event for many, many years now. What feels different this time around?
It's a little slower this year, obviously. Yes, I have covered the BOA Forum here on Hainan Island for actually before this year, 17 consecutive years. Then it went dark for about 4 years, actually 5 years. We have not been back since 2019. And, you know, they really do want to instill some confidence in the foreign visitors who come here, simply because many of them, like me, had not been here for many years. And also from the National People's Congress, which I covered a couple of weeks ago in Beijing, we didn't get a lot of explanation of any policy moves, no big bank stimulus, and really the press conferences from all the ministers and heads of state agencies really read from scripts in their answers, and we didn't get a press conference from Premier Li Qiang. And on top of that, Li Qiang and Xi Jinping are not coming to BOA this year. Usually the Premier and the President alternate, coming and giving the keynote speech. This year, it's the number 3 man on the Politburo Standing Committee, Zhang Lijiu. He is simply the chairman of the Standing Committee of the National People's Congress. So I'm not necessarily expecting anything extemporaneous from the number 3 man. He will probably be mimicking many of the common words coming from Xi Jinping at the NPC, and that is new productive forces and high quality development. We're going to hear that a lot because we're on Hainan Island, and it's really a pilot zone for new energy vehicles and batteries. Every vehicle here at BOA is powered by a electric battery. So again, this is a test zone and a place where China will signal that they are going to be the leader in new energy vehicles.
And we've seen a lot of, I guess, behind the scenes meetings that are being ongoing with corporate executives from around the world with Chinese officials. What have we heard so far, Steve?
Well, so far we've heard from Li Qiang, the premier at the China Development Forum up in Beijing on Sunday, essentially saying there is strength in the Chinese economy. There is strength for over the long term in the property sector. He downplayed the concerns in the property sector and the debt, as well as the debt at the local government level, which is a very big problem at the provincial level. So again, they want to instill confidence. And one thing that BOA has always been, or regularly has been used by top leadership, is to unveil some sort of signature policy initiative. We've heard it in the past from the past premiers as well as Xi Jinping. We're not necessarily expecting that this year. This is a confidence-building exercise over the next 3 or 4 days to reassure foreign investors who come here that China is open for business, and that because the central government has not unleashed tons of stimulus yet, that doesn't mean they don't have the tools to do so. Later today, we are going to be hearing on a panel from the PBOC Governor Pan Gongsheng, as well as a number of other Chinese former and current leaders, including state-owned enterprises in the energy sector, and also geopolitically. Former Commerce Secretary under the Bush administration, Carlos Gutierrez, will be here. He will be on a panel with, among other people, some of those state energy champions talking about geopolitical issues, no doubt.
Steve, great to have you. Stephen Ingles there, our chief North Asia correspondent in Boao for us for the next few days or so. And as we, of course, watch what those conversations will look like, we're certainly looking at the renminbi, where this whipsaw that we saw from the fixings is certainly leading a lot of investors thinking about what is next for this. Is there still further pressure? We're getting closer to that upper limit of the PBOC's ban. So we're still dealing with some weakness here, despite that stronger fix on Monday. Traders are still on edge whether, the PBOC, are they actually loosening its grip? Will they tolerate further yuan declines? That fix just out in just a few minutes' time. This is Bloomberg.
To succeed.
Taking you live now to the Milken Institute Global Investor Symposium, where the Financial Secretary Paul Chan is opening up, of course, this conference and with his opening remarks. And certainly the key question is really what's going to be the pitch that Hong Kong is going to make for all these financial leaders out there about where Hong Kong is as a financial center. Certainly it's going to be very busy. We got Milken first. You got Wealth for Good coming up among other events this week as well. So, David, it's about to be very busy where you are.
Yeah. In fact, it was just a couple of minutes back. It was extremely busy. We're actually right outside the door of the main hall. In fact, just anecdotally, in case some of our viewers missed it, Paul Chan actually walked up the stairs, came over right at the show before the show was started. So I told him, "You're late, mate. Just go inside." Anecdotal and jokes aside, of course, here on set, we're joined, of course, by our first guest here to talk us through the health of the Chinese consumer, travel demand, what they've seen, and where they go. Of course, the biggest platform in China. Jane Sun, founder CEO, of course, of Trip.com, joins us. Nice to see you and good morning.
Thank you. Good morning.
I think you have a panel today, Revival of the Consumer.
Correct.
We're about a year and a half from the reopening of COVID. The revival of travel, outbound travel in particular, hasn't quite gone all the way back. What remain the two sticking points in your view?
Sure. Yeah. When we look at outbound travel, we look at both demand side and the supply side. On the demand side, we already far exceeded 2019 level based on the search volume. On the supply side, we still have two major hurdles. The first one is the visa application. For some regions, it still takes months to get the visa approved. The second thing is, as a result, the flight capacity was only 50 to 60% compared to 2019. However, during the Chinese New Year, I think we saw a huge pickup. So Australia, New Zealand, and even South Africa, which is so far away from China, got lots of customers. So we are very much looking forward to the recovery.
Right, and it's suffice to say, if they remove visa requirements, for example, do you think travel immediately jumps, for example? Give me examples of, and you mentioned South Africa, for example. What are examples of places that have lifted visa restrictions and have seen a flood of tourists coming?
Sure. A couple of regions are doing very well. The first region is the GCC countries in the Middle East.
Okay.
Dubai, Abu Dhabi, Doha. We saw huge pickup in this region. And Saudi Arabia is also doing very well. They offer free visa or visa upon arrival. They double the flight capacity. So we're bringing thousands of customers over there. The second region that's doing very well is Singapore, Malaysia, Thailand. The Prime Minister in Thailand even went to the airport to welcome customers from China. So all these major measures plays a very important role for the recovery of the outbound customers from China.
Right, and visibility around visa restrictions perhaps isn't as clear as perhaps flight capacity. Do you think flight capacity comes back? Where do you think flight capacity comes back in a big way this year?
Visa needs to be cleared first, but I'm optimistic. We saw good improvements from all the embassies because 3 years is a long time. They have lots of bottleneck, but once it's approved forever. So we're very positive. Hopefully this year we'll see full recovery in the outbound travel.
Okay, how about visitors from mainland China to the U.S., for example? People talk about geopolitics geopolitics, they draw a direct line between the tensions between the two and the perceptions of travel between the two places. What are you seeing influence in future bookings?
Yeah, China is very big. Customers' interest is all over the world. So we still see very strong interest in different countries for different reasons. But obviously, people will take into consideration of how welcome they are in these specific countries. For example, Switzerland used to be not in the top 5 travel destination, but this year the visa application for Switzerland is shortened to 7 days. So we saw a surge of the travelers into Switzerland because of the policy is right.
Right. And what is your platform seeing as far as future bookings? The next long holiday for mainland China is coming up in May.
Yeah.
What do you see? Like, where are people looking to go?
Yeah. So we have 3 long holidays: Chinese New Year, October 1st, the Golden Week holiday, and the summer holiday. During these long weekend, people tend to go to far away, Australia, New Zealand, Africa, long holiday. And then we also have 3 shorter holidays. The first one is the spring break that's coming next week, and then the second one is the May Labor Day weekend, and the third one is the Dragon Boat Festival. During those holidays, people tend to travel within China or nearby in Asia.
What are you seeing? Are you seeing a pickup in bookings? Say,
yes.
Spring break is coming up, and not spring break, spring holiday, and also May holiday is coming up.
Yes. We have seen ramp up for our business already.
Okay. What about group travel, for example? Because that's also a part of your business, right?
Yes. Group travel is also recovering nicely. The new trend is rather than travel within 50 strangers on a big bus, now people prefer to travel with private tours. So a typical group travel is 2 families, 3 family. They hire a car, hire a van. They have their own family tour guide, a driver. So smaller tour, tailor-made tour is very popular.
Right. And are you tailoring part of the platform, of course, to those changing needs, for example?
Yes, absolutely. We have seen new trends. For example, young people are focusing a lot on entertainment, wellness. So happiness and joyfulness is the theme. So we saw huge pickup when there is a Taylor Swift concerts, when there is a sports competition. We saw a huge amount of the people travel into the location. The second one is for older generation. That's the first generation who have money, who have time. So the cruise industry is also blooming for these customers. Now the third path is the high net worth. So luxury hotels gets lots of business as well.
I'm curious because you mentioned China's a big place, right? Overall, the economy doesn't seem to be doing as well as it should be. Yet travel, to your point, seems to be well and good. Help me understand the disconnect between the two.
Yeah, China is very big, so it really depends on the line of the business we're talking about. Certain business might have some pressure, but if you look at travel, it's doing very well. Entertainment, concerts, music, cinema, restaurants, those are doing very well. Wellness are doing very well. So it really depends on what segment you're looking in.
Okay. Well, what's the most expensive thing I can get on your platform? How much is it going to cost me?
The flagship tour we sell costs about 200,000 USD per person.
200,000 US dollars.
Correct.
What
and
do I get from that?
We charter a flight from Singapore Airlines. We bring customers to different festivals. So, for example, Carnival in Brazil, concerts in certain area. We try to time it so that the customers get the best out of this tour. We also bring customers to the landmark hotels where they have wonderful views, wonderful festivals during their visit.
200,000. That's not for me. Maybe Yvonne can afford that, but she'll comment in a moment. Just on the business this year, I think revenues doubled last year. It was a good year for you guys. 44 billion renminbi, if I'm not mistaken. Analysts see 51 billion this year and maybe 60 billion in 2025. Do you think that runway is achievable?
Yeah, we believe in the long run, travel is an evergreen industry. So we look at the GDP growth rate for about 4 to 5%, for example, and travel normally can double that because the population who can afford travel normally makes more money, and we will be able to outpace the travel industry. So somewhere between 15 to 20% CAGR is achievable.
Okay, so it looks like it's business as usual for you guys. Jane, it was a pleasure to speak with you. Have a great panel, of course. You're coming up next year, right behind us in the hall. Yvonne, I'll send it back to you. Conversation there, of course, with Jane Sun of Trip.com. And of course, also coming up here, plenty of guests, other guests coming up here on show. So that was the consumer part of our curated guest lineup today. We'll be talking all things private markets, private equity, private debt, and direct lending, of course, coming up, and also allocations from pension fund. Are people reallocating back to Chinese equities in a very big way? A lot of that, I guess, depends on where the dollar goes. And I know, Yvonne, you're looking at the Chinese currency at this point.
Yeah, I mean, given what we've been seeing so far, I mean, maybe we can afford that charter flight of 200 grand. Yeah, I was going to say, you owe me a birthday present maybe, Dave. But look, okay, stronger fix from the PBOC. Once again, that's really helping. And we're extending the rise that we're seeing in the renminbi here right now. 724.03. 709.43 was that reference rate. And you're seeing some of the proxies like the Aussie dollar right now ticking higher after that second day of messaging from the renminbi, the PBOC, sending a message that, they're not quite ready to let this currency go. Play more ahead. This is Bloomberg.
You're back with us, and we're live, of course, out of the Global Investment Symposium, Milken Institute, first edition here at the Regent in Hong Kong. So we're looking at markets, just approaching the open here. So futures are actually pointing up, really, when you look at Hong Kong specifically. I'm just waiting for initial indications of mainland equities to come online. And if I was to fancy a guess, we'd be flat in the mainland right now. We are outpacing, though, the gains we're seeing across the region. 8 shares index is up 0.9%. Well, I'll be generous, 1%. We're also seeing, Yvonne, some strength coming through in the Chinese currency, which really, in many ways, underpins risk appetite almost on a daily basis. Anyway, I'll leave that there for now. Fun.
Yep, at least that stronger fix is helping the renminbi at least today in terms of support. Analyst actions here today, we're focusing on the energy space. I believe it's Shenhua Energy, the light that we're tracking here today, cut to neutral at Goldman. China Coal also cut to neutral at the firm. And Greentown, the property space, China rate a new buy at Founder Securities. Lots to talk about when it comes to earnings. We're seeing a lot of price action already in the pre-market here. PetroChina there after posting record profits. China Merchants Bank also rising after we saw a beat in full year net income. Also surprised when it came to that dividend as well. BYD Anta coming up next. This is Bloomberg.
Welcome back and good morning from the Asia Pacific. You're watching the China Show, counting down to the open of trade, 40 seconds away. A couple of big themes we're tracking here as we go into the Tuesday open. We have an economic survey, at least the latest economic survey from private economists in China should be out in the next hour or so. 4.6% growth. 0.8% on inflation was the last thinking. We'll see whether that changes, of course, in this new edition. And, of course, we're in the thick of earnings season, which, Yvonne, I know you'll talk about in just a couple of minutes.
Yeah, you're seeing a lot of the price moves, at least upside surprises are certainly helping lift some of these stocks here in the Greater China region here this morning. So certainly that's one to watch here, of course, as we start to see this equity rally globally take a bit of a breather here today as well. So earnings are very much in focus to see whether we can resume this rally in China as well. We certainly are seeing a little bit of positivity when it comes to these markets here today. Hang Seng is up about 0.75%. Shanghai slightly to the upside here, but we're seeing tech catch a bid. Just takes a 1%. 8 shares are also up in similar measure. On the flip side, you are seeing when it comes to yields, we're at 231. The renminbi is still the one to watch, right? 724.10. So that strength continues for another day. So a second day where the PBOC has set that reference rate stronger than estimates there. And continue to send that message that perhaps Friday was a bit of a blip on what they did there. But JP Morgan had an interesting call. That mega move that we saw on Friday might just be a bit of a outdated or a long overdue story. We'll take a look at that a bit there, but we're checking very closely what goes on with earnings. We talked about some of the oil plays. We have the banks coming up this week as well. Sector by sector is what we're looking at. It's really mostly to the green, with the exception of real estate as well as Macau gaming. But everything else seems to look pretty solid here right now. So sentiment seems to be pretty positive. You flip the boards and see what exactly is driving that. Well, we talked about the fundamentals. It's back to what we're seeing in these results, right? PetroChina is certainly one winner here this morning. So we're talking about record profits. We're stocks up some 2%. But it really was what we saw, that rebounding gas demand that's really helping to offset some of the impact from falling oil prices. That's helping the likes of PetroChina. China Merchants Bank also beat when it comes to earnings. And also that surprise payout ratio, Citi said, was quite pleasant, given what we heard from the lender there. And BYD, Anta, we're going to get those coming up. So certainly a lot of talk about whether BYD can maintain those price margins and secure that lead when it comes to the EV space, and really where we are in this consumption story when it comes to Anta as well. All right, take a look at this. We're taking a look at the renminbi very closely as well. So yes, we're seeing a rebound. It's really helping the likes of the Aussie dollar here today as well. But you take a look at what's still driving this weakness and perhaps why traders are still so hypersensitive to any sort of movement when it comes to the fix, and whether the PBOC is willing to let it weaken further. Rate differentials still haven't been favorable for the renminbi for some time now, right? You take a look at how these two-year differentials look, and the spread between the U.S. and China yield, we're basically at, 260 basis points? Last time we saw that sort of wide gap was back in October, where we put this line down here. That was when the renminbi was trading around 730, Dave. We're at, 724? As we speak here. So does this mean there is still some foundation for the renminbi to weaken further? JP Morgan certainly thinks so. They're saying despite that multi-sigma move on Friday, there's still fair value. The renminbi is now more than 2% above that fix. Of course, we talk about where we are close to that weaker side of that trading band, but maybe we have further to go. Dave?
Absolutely. I think this is really one of the most underappreciated catalysts for risk assets, not just in China, right? So you were talking about the fix earlier on. I mean, there's strength coming through in the Chinese currency right now. Immediately after that, the Aussie dollar started moving up as well. I know Korea's been doing well even before the fix, but Korea's even hitting a lot more highs right now in that equity market. So it really underpins this risk rally that we're seeing across the region. So certainly there's a micro story in terms of the market reaction today. There's a macro story. If the Fed cuts rates and that rate differential then tightens a little bit further, that could be a further tailwind for risk assets, not just in China. In any case, of course, Yvonne mentioned BYD. I'm here at the Milken Institute Global Investment Symposium. BYD's Executive Vice President Stella Lee is actually speaking here, scheduled to speak here today. So we'll keep an eye on what they say about current demand trends and the trends. Now, generally speaking, of course, we talked about EVs. The other big play there is CATL, of course, world's biggest battery maker. We spoke to them. They've said the company's pressing ahead with expansion despite this global slowdown in EV sales growth. There's a squeeze in margins. There's a price war taking place. In his first interview with international news outlets since, 2020, Robin Zhang told Bloomberg he is not worried about overcapacity and will crank up the output of more technologically advanced products. For more on this, let's bring in Katrina Nicholas, who leads our Asia transport coverage. Katrina, certainly a milestone to have a conversation with this type of company of this scale and importance at this point in time. Just your key takeaways from this interview.
Yeah, well, I think one of the really interesting things was how Zhang was talking about how China's EV sector is now market-driven, and it really is survival of the tech savviest. This view that sort of market forces are taking hold in China is reinforced by the fact that the central government has done away with national subsidies at the end of 2022. And around that time, Tesla also fired the opening salvo in a price war that's been squeezing profit margins, as you said, for many manufacturers and putting others further into the red. So, Zhang was saying that some companies may fall behind, and naturally there's going to be some consolidation. But, while consolidation among EV manufacturers could lead to a shrinking of battery makers' customer bases, CATL, for its part, it says, the technology developments that they're working on, that gives Zhang confidence. CATL is working on faster charging batteries that Zhang was saying could charge a car in 10 minutes or even less. And they're also playing with a chemical mix within batteries to get sort of a maximum performance under various circumstances like extreme climates. So some pretty interesting outlook there from the world's biggest battery maker.
Yeah, and I think for international audience, they're not too familiar with this name, but certainly their customers are as big as BMW, Mercedes-Benz. Tesla perhaps is one of their biggest customers abroad. I mean, how would you classify this relationship that CATL has with Tesla now? Can it be a deeper relationship, Katrina?
Yeah, well, that's another thing that is really keenly watched because, as you said, Tesla is pretty much CATL's most important customer. And Zhang had some pretty interesting things to say when we sat down with him yesterday. He said that CATL is working with Tesla on these faster charging cells. And interestingly, he made mention of a $25,000 EV in the context of robo-taxis. But that's interesting because Elon Musk is also working on a Tesla model that would hit at that real mass market sweet spot. Zhang also confirmed that CATL is supplying some machinery to Tesla's factory in Nevada. It was reported last month that Tesla plans to expand battery production in Nevada, opening a small facility using some idle equipment from CATL. So certainly, there is a deepening relationship, I think you could say, between these two absolute heavyweights of the EV industry globally.
Yeah, well, Katrina, you would know. Let me sneak in BYD. We can't talk about Tesla without talking about BYD. Company comes out with earnings later today. I mentioned earlier, a few minutes back, I'm here at a conference where the Executive Vice President, Stella Lee, will be making an appearance. It's slated, at least, based on the schedule here as well. Talk us through what's important to keep an eye on as far as these earnings go later on.
Yeah, so BYD has already flagged that full-year net income will come in between 29 billion yuan and 31 billion yuan. That's a record. The company has kicked off 2024, though, with discounts across almost its entire lineup as part of a really aggressive campaign to persuade drivers to ditch their gasoline cars and go electric. And I think this focus on volume and market share, particularly as competition intensifies in China, could really be squeezing margins. And also analysts are expecting net profit in the fourth quarter to be down on the third quarter, also amid that changing sales mix. Just to give listeners a little bit more information about the scope of these price cuts, we did some analysis earlier that showed BYD has cut prices on more than 100 existing model versions compared with just December, and it's relaunched a further 70 model trims with lower prices. In fact, the only unaffected vehicles are in its new Yangwang brand, which is this sort of, really high-end luxury supercar that sort of goes for around $200,000 US. So the extent of the price cuts has shocked even long-time observers that are quite used to the nature of China's hyper-competitive auto market. We had the head of China's Passenger Car Association. He wrote on his blog last week that this sort of discounting has become ultra-intense and reached an astonishing level. So I think what impact that is having on BYD's bottom line as one of the key players in this price discounting is something that investors are definitely going to be looking out for.
Yeah, sounds like we're still in the thick of this price war here. Katrina, thank you so much. Katrina Nicholas there from our Asia Transport team talking a bit more about CATL and BYD. Speaking of earnings, though, here's where we are. If you want to do a bit of a pulse check of where we are. So we're about 25% into the earnings season. We're just a quarter of the way in. What we heard so far is, though, over half, 54% or so of companies in the MSCI China have missed their estimates so far. So maybe it's leaning a little bit more to the negative side. And this coming when we're starting to see broad sentiment in this market lose a bit of momentum. Certainly we saw that last week. We'll see if earnings can kick in a little bit more to change that discussion. And some other big corporate stories that we're tracking for you today is, of course, Boeing. And really shares close higher after the plane maker announced a sweeping leadership overhaul. The CEO, Dave Calhoun, is stepping down at the end of the year. And commercial planes chief Stan Deal is leaving immediately, while Chairman Larry Keller will not be standing for re-election. Our Guy Johnson has more.
News that Dave Calhoun is going to step down as the CEO of Boeing alongside Stan Deal, the head of Boeing Commercial, in some ways does come as a surprise, but it's certainly not a shock. We've seen investors, customers, unions and politicians piling the pressure onto this company after a series of mishaps that started 5 years ago with 2 fatal crashes involving the 737 MAX and subsequently have never really been dealt with. The latest crisis coming back in January with the door blowout on the Alaskan Airlines flight. Since then, this company has been in crisis mode and pressure has been growing on Dave Calhoun, particularly from customers who have been calling for change increasingly over the last few weeks. The real question now is who could ultimately replace him. He will be there until the end of the year, in some ways as a lame duck CEO. The name that is being floated, Larry Culp from GE. But our understanding is that maybe Larry Culp doesn't want the job. Why would he want such a tricky job at such a tricky time, particularly after he has just fixed GE and put it back into a much better place? Many people will be asking all kinds of questions as to whether or not there is an insider that could potentially fill this role. But I suspect that many customers and regulators and politicians would like to see somebody coming from the outside to finally fix this company. Guy Johnson, Bloomberg, London.
Yeah, that's certainly a difficult proposition given the year that, well, obviously speaking, Boeing's had so far. Right, just ahead here on the China show, we'll get you guys an update, and certainly things have been fairly toppy as far as South China Sea is concerned and the tensions there, and given events that we've seen just this week, the latest clash between Chinese and Philippine boats there. We'll be speaking with a reporter who was actually on board one of those ships and actually witnessed that exchange. We'll be live to Manila next. This is Bloomberg.
Well, Beijing says the Philippines is building a military outpost on the shoal in the South China Sea that is claims as Chinese territory. Now, China's Vice Foreign Minister lodged a protest with Manila, calling on the Philippines to stop what it calls provocations at sea. Now, earlier, the Philippines summoned Beijing's envoy to formally complain about aggressive actions by Chinese vessels after this clash when it comes to water cannons, Dave, over the weekend in the disputed waterway.
Yep, let's bring in Andrea Colonzo, our Manila-based reporter, who was actually on board and witnessed that encounter firsthand. Andrea, thanks for joining us. Well, just give us a sense. What exactly did you see?
So it was a week-long embed trip to the South China Sea, and it was an eye-opening first-hand experience. We saw how both China and the Philippines are asserting their claims in the South China Sea. So as a background, China has sweeping claims in that area, which was widely invalidated in 2016 in a ruling that heavily favored the Philippines. But Beijing has kept its presence in the contested waters. So I saw firsthand Chinese Navy ships there in the area, Chinese Coast Guard vessels, which at one point used water cannons on a Philippine supply boat for, I think, roughly an hour. And then also there were several Chinese militia ships there that acts as a force multiplier for Beijing.
Andrea, I mean, this is really testing the limits of this decades-old defense pact between the Philippines and the U.S. now.
Yes, exactly. So analysts are saying that China is employing water cannons to test how or when the mutual defense treaty between the U.S. and the Philippines will kick in. So this pact calls for an armed attack in the South China Sea to be able to pull in American forces to help defend the Philippines. But analysts are saying the Chinese attacks using water cannons are in a gray area. So there's a question, is this an armed attack? And will this be enough to draw in the U.S. in the South China Sea?
So Dreo, I guess before, a lot of other questions I want to ask you, but I guess before we get to whether or not the strategy from Malacanang and Manila is actually working, have we heard from the Chinese? Have we heard from Beijing on this latest incident?
Yeah, so China has maintained that its actions were lawful and restrained, and it has warned the Philippines that it will continue to take steps to prevent what it calls illegal trespassing in its territory. However, the Philippines, as you mentioned, also launched a protest and called China's actions aggressive. And the Philippines said it puts into question China's sincerity in settling this maritime dispute.
Andrea, we're going to leave it there. Andrea Colonzo there. Thanks so much for your reporting. A fascinating video that we're seeing here as well. Some other geopolitical stories that we're tracking for you today. The U.S. and UK are accusing state-backed Chinese hackers of targeting politicians and companies for years. Both countries have announced sanctions against 2 individuals, as well as a company in Wuhan that Washington alleges was a front for malicious cyber operations. New Zealand has also accused China of hacking its institutions, saying its parliamentary network was breached back in 2021. Russian President Vladimir Putin has for the first time blamed Islamic militants for carrying out Friday's deadly attack on a Moscow concert hall. But he told a meeting of officials that investigators were still looking to establish who ordered the attack that killed 139 people. Putin was quoted as saying that the U.S. is trying to convince the world there was no Ukrainian involvement. The Israeli government has called off a U.S. trip by senior officials as after Washington decided not to veto a UN resolution demanding an immediate ceasefire in Gaza, a decision reflecting a shift of approach by Washington. 14 of 15 UN Security Council members voted in favor of the resolution. The U.S. abstained, citing the measure's failure to explicitly condemn Hamas for its October 7th attack on Israel. We got plenty more ahead. This is Bloomberg. All right, we're checking markets, in particular when it comes to commodities here today, Dave. And I didn't think we were talking about this, but we're talking about cocoa. So chocolate set to get a bit more expensive here. Take a look what happened when it comes to cocoa prices yesterday. It surged by $700 a ton in a single day, and now it's topping $9,000 a mark here. So it certainly is something that's very interesting because now it's more expensive than the likes of copper. It's more expensive than even the cheapest BYD cars we were talking about in the midst of this EV supply overcapacity and the like here. But certainly, it really comes down to what's happening in Ghana and the funding challenges there. It's the world's second largest grower. And so there are some concerns about the shortages of cocoa.
You know, our colleague Javier Blas put out a fantastic sort of roundup online on this. And he really talked about, I think at the crux of it, to your point, Yvonne, you're right. It's really the worst, the deficit as far as that gap between supply and demand is concerned. I believe going back to the 60s, or at least 60 years, I could be just confusing those two things, but effectively, you know, this is a generational gap here. So, well, I guess your chocolates are about to get more expensive. In fact, it's now, you know, I was just checking this. It's actually now cheaper to fly first class from New York to Europe to get your chocolate fix than it is to, I don't know, put an order in for a metric ton of cocoa. But why would you? But just to put that into context, right? So it's gone, this thing has gone vertical, parabolic, as some would say.
Oh, man. It's not sweet, isn't it? Well, maybe it is. I don't know.
Well, I know what to get you for your birthday.
Yeah? Chocolate and that charter flight that Jane's son was talking about on trip.com. All those things are expensive.
No, you have to pick one. Pick only one.
No, you need the chocolates on the flight. to enjoy. All right, let's talk about markets here right now. We're talking about a big trading debut that's happening in Hong Kong here today. This is a casino operator, I believe, Palacino Holdings, seeing about 19% pop on its first day. So certainly that's helped lifting the market in some ways here, and really the prospects of the gaming and leisure sector as well. You take a look at earnings. We talked about PetroChina, China Merchant. Those are the standout ones here today. Record profits for PetroChina, China Merchants as well was a beat, and pleasantly surprised, according to Citi, when it comes to that dividend or payout ratio. BYD and Anta certainly are the ones that we're watching out for coming up next. Anta Sports, though, we're seeing it drop some 2% ahead of those results as well. Your China dashboard is looking like this here. I think it's looking a little bit better than the rest of the region here today when it comes to Greater China markets. You are seeing some upside of Hang Seng, about 0.4%. Would come off some of the highs, maybe 30 minutes into the trade here right now. But it's pretty slow going when it comes to equities here today. Tech is also pairing some initial gains here, but we're watching very closely dollar China. It looks like the initial sort of lift that we saw, that strength in the currency, we're losing a little bit of steam now after we did see a stronger fix for a second day from the PBOC. Still, as we talk about, the rate differentials are not really helping to support this currency. And we take a look at what it comes to, broadly speaking, it is a broad-based rally here with the exception of just a few sectors. We got plenty more coming out from Milken and David on the ground there. This is Bloomberg. Welcome back to the China Show, Hour 2, and we're just about half an hour into the session here, the CSI 300. Now, not doing a whole lot, but we're still seeing some gains across major benchmarks here with the MSCI China up about 1/5%. There's a lot of earnings on tap here as well. We're focusing very closely on the renminbi and this rebound that seems to be at least losing a little momentum now, but we're still holding on to some strength here at around 721. I believe that is the onshore rate here, 724 when you look at the offshore rate here this morning. But the rest of the region is looking okay. I mean, you have some of these tech-heavy benchmarks like the South Korea's Kospi of Taiwan is doing slightly well too, but we're seeing Kospi up more than 1%. So clearly the outperformer here today. The dollar is, I mean, it's pretty mixed, but we're taking a bit of a breather here, just given its recent strength here this morning. And we're watching very closely what's going on with sovereign bonds. A bit of a sell-off here just after what we heard from the likes of Raphael Bostic from the Atlanta Fed overnight, saying, look, he's pricing in just one, Dave, price rate cut from the Fed in 2024. So that led to a bit of a breather when it comes to this S&P rally and really a sell-off in bonds here as well.
Yeah. That, no pun intended, one cut is not going to cut it, I think, right? When you look at the bull case from Goldman Sachs, 6,000 and multiple expansion to, I believe, to 22, 23 times earnings. We've also heard, I believe it was Mike Wilson, if I'm not mistaken, talking about how this market does need rate cuts to justify the valuations at current levels, and then we need to talk about what lies in store ahead. Now, all that being said, does China, I guess, in some ways provide that alternative to U.S. equity markets that are looking for a catalyst, right? And funnily enough, and ironically enough, people are looking for earnings in the U.S. at that price. People are looking for Chinese earnings at these prices as well. All that being said, I'm here, of course, at the Milken Institute Global Investment Symposium here in Hong Kong. Just really one of many major events taking place here in Hong Kong this week. One Earth, you have Art Basel, of course, coming through. You have this one, of course, taking place here. So, well, for good, it's really another one as well. And, so we're busy here as far as all the VIPs in the region are concerned. UBS chair, I believe, is speaking here today. Sergio Mozzi. Paul Chan has been a very busy man, of course, trying to market Hong Kong. Hong Kong is back and the economy is doing well. He was actually speaking at the One Earth Summit yesterday. I saw some posts around that. He also just passed by about an hour back on the way to stage before he gave the opening keynote here at the Milken Symposium. In fact, he talked about the economy in Hong Kong. Take a listen to what he had to say, Paul Chan.
The Hong Kong economy is solid and growing.
There we go. Solid and growing, according to Paul Jan. Joining us now exclusively here in the studio is the Hong Kong Secretary for Financial Services and the Treasury, Christopher Hui. Christopher, it's great to have you here in our studios for the first time, I believe. We talked about this mega week that we're having here in Hong Kong, really bringing in some of the top financial heavyweights to this city. What's going to be the pitch to them?
I think the pitch is very easy, because Hong Kong has been an international financial center, and we can continue to be an international financial center. And we have a lot to offer. Like, for example, apart from financial professional services, we have a vibrant society economy. And also we have a very vibrant art scene, as illustrated by the presence of Art Basel and many art events. So what you can see in Hong Kong is a very vibrant cosmopolitan, epitomizing what Hong Kong has been and continue to be.
You obviously have been tracking a lot of these family offices that are trying to set up a shop here. How's that going so far? Give us an update.
In fact, recently we have an independent party doing a report on the number of our single-family offices in Hong Kong. And as recorded, we have 2,700 of them. And if you look at the composition of these 2,700 single-family offices, there are classified into 4 categories. And the top categories are those of AUM more than $100 million US, basically take up 1/3 of this number. And in that report, basically what we haven't counted is the multiple family offices. So if we also count the multiple family offices as well, I would say we have a very vibrant and also very crowded family office scene, I must say.
How many of those are new since you initiated these schemes back in 2021, I believe? I mean, are you confident you're going to hit that target that John Lee said of 200 family offices by 2025?
Definitely. If you look at what has been achieved since we had our first Wealth for Good events last year, when we announced a host of 8 measures to draw family offices here in Hong Kong, we have helped through our investment entity, which is the Invest Hong Kong, the investment promotion entity, around like 60 family offices stationed here. But that said, in fact, many other family offices has been inquiring about our policies and also have been trying to set up family offices through their own means. So I would say the number which is actually landed in Hong Kong should be bigger.
Obviously, we've been talking about the competition with Singapore when it comes to family offices. I mean, what we heard last week with the Article 23 being fast-tracked into law, is that a concern among the wealthy that you've talked to?
Not really, because as highlighted by David, also yourself, we have a mega event week, and also if you look at how business has been going, it's very much business as usual. If you talk to many of these high net worth individuals or families, what they are looking for is ways to diversify their asset, and that's exactly what Hong Kong has to offer. Like, for example, in our Wealth for Good event, we have a number of themes. We have luxury and legacy, we have philanthropy, and also we have tech, and also we have sports as a potentially emerging asset class. The reason that we have this set up is that we look into ways to see how Hong Kong can help these family offices and family wealth to diversify into new asset classes and also continue to find value here in Hong Kong.
I believe Dave has a question.
Yeah, Christopher, hi. David here. By the way, it's nice to see you in our studio. Sorry, I couldn't be there in person. We're busy here, of course, also at the Milken Institute Investment Symposium.
Yep.
I guess my question for you would also on family offices. I think about a week and a half back, a relative of the Dubai royal family came to Hong Kong. You probably know they're setting up a $500 million fund. And I'm wondering how much traction you think we will get along this Hong Kong, Greater China, Middle East corridor, which seems to be gathering a lot of momentum. Certainly we've gotten a lot of queries from the banking sector, from people looking to place talent, for example, as it pertains to the business from the Middle East. If you could give us a sense of what you are seeing on the ground.
As you rightly said, we have a host of measures basically to grow Hong Kong as a family office hub. And among them, first of all, is a tax concession. At the same time, we have a capital entrant scheme, basically allow people to have 30 million Hongki to come to visit in Hong Kong and station in Hong Kong, and also to be RPR. And in fact, all these measures added together is very much reflective of the very nature of Hong Kong, which is a very diversified and cosmopolitan city. And against that backdrop, we have been working closely with many of our Middle Eastern counterparts. Like, for example, my bureau has signed an MOU with the Dubai Economic Corporation, right, with a view to have cross-referral of family offices. And of course, as a international hub, we welcome family offices from across the world to set up here.
Right. Now, Christopher, it's one thing for family offices to come and take that money and domicile that money into Hong Kong. It's another thing to keep that money in Hong Kong and not be allocated elsewhere in the world. What is the government doing to incentivize these family offices to, as much as possible, keep the money in Hong Kong or Greater China?
I think Hong Kong is a very open society, and also what we want to do is to encourage and also facilitate family offices and also family wealth or other investors to use our financial and professional services more. Be it either park their money here to invest in Hong Kong or the mainland, or they use their money elsewhere, so long as they use and also employ our financial services and professional services, we are happy.
We had a really interesting story out, Christopher, yesterday about this lost generation of bankers in Hong Kong, where basically you've seen financial services activity has slowed. The IPO fundraising has basically been cut in half. Last year, it's hit VCs, it's hit private equity in many ways, job cuts all along the way here in the city. And it seems like some of the things that were used to be the norm, China's explosive growth, the ties between domestic and global capital markets, is looking more like a thing of the past. What do you think can turn around sentiment?
I think what is unique about Hong Kong is that we are a financial service center, basically serving a scale which is 10 times, even more of our GDP. Because after all, we are a city economy, and also we are a global financial center, which is serving clients from across the world. And you mentioned about crypto markets development and also how we be affected by heightened interest rate and geopolitics. I think all these are something that we see no different from other jurisdictions. But that said, if you look at how Hong Kong has been faring in other areas of financial services, be it like, for example, in our trading market for ETFs, we see double-digit growth, more than 20% growth in turnover. And also at the same time, in the insurance market, we see business growing for the life segment more than 30%. Yeah. And also at the same time, if you look at wealth management, for example, while we have gathered a very solid base and also crowd of financial and also family offices interested to set up offices in Hong Kong. And recently, for example, we have launched our capital entrance scheme, as I highlighted.
So what is going to be setting Hong Kong apart from Singapore when it comes to this competition for family offices? What do you think is going to be the key kind of swing factor for you guys?
I think the key factor is our diversification in terms of what Hong Kong has to offer based on the breadth and depth of financial talent. Because if you look at Hong Kong, our talent pool is far deeper and also broader than the rest of the world. And at the same time, our access to the mainland and also at the same time, the breadth and sophistication of professional services is unique. And that's why we are very confident we are going to hit the target, as you highlighted, and also coupled with the various mega events that we're hosting here, including Wealth for Good and others, we will definitely hit that.
You mentioned about crypto. How are you looking at what's been going on there? How prepared do you think banks are when it comes to digital assets now?
We have been taking a sustainable approach in terms of how we want to facilitate the growth of this market. Because after all, if you look at many of the risks that this market has been posing, it's very similar to conventional financial and also other type of services. And that's why the principle that we are adopting is very simple, which is should they present similar risk, we will subject to similar regulation. And this is something that we have done so far. We have already starting to regulate the virtual asset service providers, which is the exchanges. And also we will soon regulate the virtual asset OTC trading. And this is something that we are going to down the road try to make sure this sector can grow in a sustainable manner.
Christopher, I want to ask you about private markets and private capital. And certainly direct lending, private credit has been an extremely hot asset class. Private equity, of course, and we have a number of well-established funds in Hong Kong. And I'm curious what you're seeing as far as the outlook for making Hong Kong at least some sort of base for private money is concerned.
In fact, we have been hearing a lot from our practitioners here in the region and also globally in terms of what are measures that we can do to facilitate more private credit or other types of similar services development here in Hong Kong. And we are looking at some type of tax arrangement in order to facilitate that. And this is something that we are looking into as a committee, going to chair by me, in terms of seeing any types of tax arrangement that we can do to facilitate that.
What else you could bring to Hong Kong? I mean, there's been talk about not just crypto, bond futures, commodity futures. Is that something in Hong Kong's future as well?
Yeah. I think Hong Kong's strength has been well known and unique, and also something we'll continue to build on as a connector between the mainland and also the international global markets. And it's something that we'll continue to do and continue to deepen. And one thing you highlighted is in terms of the launch of the Chinese bond futures offshore through us as a way to facilitate more risk management tools and arrangement for global investors to access the mainland bond market. And this is part and parcel of our overall strategy, really, to first of all grow the RMB international ecosystem through Hong Kong, at the same time to consolidate and solidify our role in the IFC.
Christopher, it's great to have you. Christopher Hui there, Hong Kong Secretary for Financial Services and the Treasury, joining us here in our Hong Kong studio. Still ahead on the China show. We have more on Hong Kong, with home sales seeing some further declines as the brief rebound earlier this month starting to fizzle out a bit. We'll have the details coming up. This is Bloomberg. All right, we're still trying to figure out what the direction of renminbi is really going to go. And if you're thinking about the fixings, that certainly is one sort of counterbalance that we could see for the central bank when it comes to what we could be seeing. Because the fundamentals still may make it seem like this renminbi has further to weaken. Take a look at those two-year differentials, right? So JP Morgan had a pretty interesting note out talking about this. That spread between the two-year in the U.S. and China right now is around 260, close to 270 basis points. Back then when we hit those levels was back in October when dollar China was around 730. We're trading at, what, 724 here this morning, Dave, so perhaps there is still a little bit more to go. And really what we've been seeing in these PBOC fixings, has it really sent a message to the world that they're not allowed or they're not willing to let this renminbi weaken further?
Yeah, because I think it's a more difficult proposition. And, let me complicate the math, right? You were talking about how, conversations around only just one rate cut from the Fed. What is that really going to do to that spread, if at all? So it remains certainly something that tactical and tradable at the moment, but longer-term fundamentals are quite, the oceans apart, quite literally, China and the U.S. Let's bring in our team to give us context on what they're thinking today and maybe how this story plays out moving forward. Mary Nicola, our MLive strategist, and of course our FX and rate strategist, David Finnerty, joining us right now to talk us through this. David, I'll start with you on the Chinese currency this week, and certainly we came into this week really on much weaker footing on dollar China. How do you think the last 48 hours informs us of what the next 48 looks like?
Well, I think certainly the PBOC has laid basically a line in the sand and said, okay, we don't want it to depreciate much further, certainly in the near term, and we certainly don't want it to depreciate rapidly. So the yuan fixing from the yuan is remained about 709, 710, I think, is the line in the sand. If it goes, the fixing which went above 710, then I think the market will quite happily sell, which is what you saw on the Friday's move. So the PBOC's very quickly come and said, well, we're going to keep it in the 709 territory. I think it will stay that way certainly into quarter end, because you're dealing with quarter end and month end flows, which can complicate everything. And certainly with the US PCE data looming at the end of the week, which could see a rise in US yields, I think the PBOC will certainly say, okay, let's end this quarter on stronger footing. We don't want any rapid depreciation, so they're going to do their best to make sure that the yuan consolidates or stabilizes, at least I'd say around the 725 area.
Yeah, and David, I mean, we're heading into a period where you have seasonality, right? When you have these Hong Kong-listed Chinese companies who start paying dividends, it's usually a time when the renminbi is leaning more on the weaker side. Does that mean the PBOC is still going to be that sort of counterbalance against the wind here? I mean, are we likely to see more support from the PBOC?
Yeah, I think so, because I think the PBOC is worried, like, if you let the yuan depreciate much more, the market's going to go, okay, well, let's really see how far you're prepared to go. And very quickly, the market will go, well, let's try 730, let's go 735. So I think if you're the PBOC, with these flows, you really want to get the yuan anchored, shall we say, particularly after Friday's move. So you want to dim that expectation that you're going, yes, we're going to let it weaken. So I think the PBOC will go completely the opposite way and go, look, we're going to really say, lay a line in the sand on the fixings to indicate that we don't want that yuan going anywhere really above 7.25, certainly for long term in the near future. So yes, I think the yuan will the PBOC will fight against those headwinds for the yuan to weaken.
Mary, I'll bring you in, not with a specific question, but generally speaking, I know you put out a piece this morning on this, where is your head as far as the yuan is concerned?
Yeah, as you mentioned earlier, the fundamentals, whether it's especially looking at rate differentials, would suggest that we would see a much weaker CNY. But that hasn't been the message that is coming through from the authorities, and the authorities are trying to counter that. And as David mentioned, you have the PCE that's coming through. You've got loads of Fed speakers that will likely reiterate their patience on rates. But then as well, you've got domestic factors that are likely to weigh on the CNY. For example, you have bank earnings coming through this week, and then you have earnings from some of the beleaguered property developers too that also add to headwinds. So it will be a struggle for the CNY, but it will have to be counteracted by what is coming through from the authorities.
Yeah, I mean, are you seeing that broadly sentiment is now losing a bit of steam? I mean, after the 5 weeks rally that we saw in Chinese stocks, and do you think earnings are going to show us further weakness? I mean, are we likely to signal some sort of correction in the near term for Chinese stocks? Mary.
There's likely to we're expected to see headwinds in the next few days, whether it's going to be the property developers, whether it's Vanke or Country Garden, are likely to show how the woes continue within that sector. And then also you've got financials. So the banks are going to release their earnings, and then would like to see the ramifications of the property sector on the broader economy. So these are some of the headwinds that equity markets are likely to face over the next few days.
Mary, our question of the day, how long before the S&P 500 hits 6,000? I actually put that on X/Twitter. The bulls, the bears, and the trolls are all it's about. Lay the foundation of that debate for us.
Yeah, obviously we've seen such a strong rally in the S&P over the last few months, and of course since the start of the year. And what we've seen is that they don't really need the Fed as much, and that the Fed is whatever, even if they decide to reduce their hikes, it could still do well. But that's all contingent on whether we continue with this Goldilocks scenario. So do we still see positive growth in the U.S.? Does the economic fundamentals support that? So as long as growth continues to in the U.S. to support an ongoing rally, as long as you see profits continue to accelerate, then you could see a rally to continue.
Mary, thank you. Mary Nicola there and David Finnerty both joining us from Singapore here and talking about the renminbi and, of course, where this U.S. stock rally is going to go. You can follow today's trading on our Markets Live blog that is on the Bloomberg here at MLive Go. You can get a market rundown in one click. There's commentary analysis from Mary and her team of expert editors. You can find out what's affecting your investments right now. This is Bloomberg. To our big take here this morning, an investigative piece here from our team, certainly a fascinating one, on Elon Musk's SpaceX. Starlink touts its high-speed internet as being, quote, available anywhere on Earth. But a Bloomberg investigation has found it's being used in territories it has no agreements with, including some ruled by repressive regimes. For more on today's big take, let's bring in our Bloomberg reporter, Bruce Einhorn, who led this story and really just telling what sort of examples are you seeing here of these Starlink kits being traded illegally? So
Starlink in many countries has agreements with the United States, for instance, with Japan. So you can legally use Starlink equipment there to access the satellites. A lot of other countries don't have agreements. So there are places in, say, Africa, the Middle East, and Central Asia where you can't use Starlink legally. There's no authorization to use it. But it's not that difficult to buy terminals somewhere on the black market, either within the country or somewhere somewhere else, bring them in, and there are workarounds that people have used. And so we're seeing this in a lot of countries, say like in South Africa, but also in war zones like in Yemen or Sudan.
I mean, obviously this is giving security concerns surrounding a private U.S. company. How are regulators looking at this here right now?
Well, in some countries, governments have issued warnings telling people this is not okay, you shouldn't be doing this. Yeah. There have also been, in some countries, police raids. Here in this part of the world, we've seen, say, India, where Starlink has applied for a license. The government just has slow-walked that. It's unclear if and when they're going to get one. And then you have the situation in China, which has just said, no, we're not having Starlink. They haven't authorized it. China's trying to build its own network.
All right. We don't have enough time, but really make sure to go to the terminal and check out Bruce's piece here, the big take here today. A great piece here, really, on the investigation that Bloomberg has done when it comes to this company. And certainly, big take is where you go for that. We got plenty more ahead. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets, of course, heading to that lunch break here. We're slightly just mixed when it comes to the Nikkei and topics here this morning. We're still tracking what goes on with dollar yen, 151.31. We stabilized a little bit. We did hear from the finance minister, Mr. Suzuki-san, talking about not ruling out steps on excessive FX moves. So a second day where we've heard Japanese officials trying to at least stem the weakness in the yen here. It seems to be working, at least for now. But certainly, in what form could that take is certainly one thing that Bank of America is looking at, maybe likely to conduct a smoothing, they say, type of intervention to slow the yen's weakening. And your Asia dashboard is looking like this here right now. So Japan's sort of in a mixed picture here, but the rest of the region, there's not a whole lot of conviction out there. But although we're still punching slightly higher, we're still a bit cautious. We still have that Fed PCE inflation coming out at the end of the week. You still have earnings in China as well that we have to focus on. But for the most part, you're seeing most sectors are in the green. U.S. futures are also getting a slight tick up here just after what we saw. This rally seemed to really stalled overnight as well. The Bloomberg dollar as well also stalling in this rally. Dave.
Yeah, and how much exposure does one want? Certainly in an equity market that, we were talking about China, right? We've been consolidating after getting close to technical levels. The U.S. has been consolidating as well, though there is a pocket of that equity market that continues to just move higher as well. And, this call on duration and fixed income, right? People have been talking about how you should be building duration at this point in time. I wonder where those people are at this point in time. This yield curve has been inverted for, 90 weeks now? So timing this thing is fairly toxic. Let's talk about asset allocation now. Private, public markets, within public markets, where do we go? Joining us here on set, Kevin Bong, Senior Managing Director, Chief Investment Strategist, Head of Singapore at Alberta Investment Management Corporation. It's nice to see you.
Great to see you, David.
AUM, so how much do you guys manage now?
So we manage 160 billion Canadian dollars on behalf of government pensions, endowments, and insurance funds for the people of Alberta.
That's quite a responsibility.
It is.
Your biggest overweights right now? Where's most of that allocated towards right?
A lot of our portfolio right now is actually in North America and U.S. and Canada from a geographical perspective, and it's one of the reasons why we set up our office in Singapore as well about 6 months ago, and actually opened our office in New York 2 months ago. We're really looking to internationalize the portfolio somewhat to improve the diversification of the portfolio as a whole.
Okay, and just before we talk about this part of the world, so the geographical overweight is North America. What about between public and private markets? And I'm guessing we'll talk more about private markets in a moment.
Yeah, absolutely. I think you'll find that the general trend for large institutional investors has always been to grow their private market allocations. It's the same for us as well. It's gone from, a tenth of the portfolio to a quarter to about a third, and probably headed towards about 40% of the portfolio. Okay. Somewhat similar for the rest of the Maple 8 as well.
And that's, I would imagine, is that deliberate? It's all taken on a life of its own, this allocation. It used to be 20% alternatives, and that was already everything. You're talking double that amount already.
Yeah. It's been a deliberate effort to some extent, but I think these things also have a bit of a momentum that build on themselves.
Okay.
The success builds on itself as well. There's been great organic returns from a lot of private market asset classes, and for us, I think that's been a part of it. but a part of it is also just finding new asset classes and opportunities to invest in. So infrastructure has been a growth area for us. Private credit has been a growth area for us. I don't think that's unusual. I think a lot of other large institutional investors are seeing the same opportunities as well. And it really is a diversification in terms of how you can generate returns, earn some of that illiquidity premium, expand the investment toolkit to make sure that we can generate good returns for our stakeholders.
Right. Do you feel like private credit, just to take an example, do you feel like things are getting crowded? I mean, incrementally you're getting, or anecdotally at least, you're getting news of certain managers giving up their fees, you're getting a squeeze on returns, for example. Are you seeing that from your end? Or does that concern you even at all?
Sure. Well, it always concerns us when everybody's excited about an asset class. There's very strong inflows. I think private credit is a relatively nascent part of the industry, but in many ways a very natural extension after, I think, some of the regulatory changes after the global financial crisis as well. And it's been an opportunity for large, long-term, stable pools of capital to be able to provide new capital solutions to the market. And so we've been a part of that, and our partners have been a big part of that as well. I think what usually matters is when there's strong inflows, at some point somebody's going to get disappointed. And it really speaks to better security selection, better credit underwriting, better credit discipline, making sure you pick the right partners as well.
And these two domains of public market, managing public market funds and private market used to be just oceans apart, and that concentric, that sort of Venn diagram has closed even further. And I'm wondering, you talk about this concept of total portfolio management. It's certainly changed the game, and especially for someone like you that's looking to match future liabilities, for example.
Yes, absolutely. And I think that is the important part of it. It's future liabilities. It's thinking about not just the cross-section of opportunities today, but really preparing for what we need to do to generate returns over a long period of time as well. And total portfolio management really allows us to think about the total returns of every asset class. So not just the index returns or the passive returns, but the active returns, stack them together, compare them across all the asset classes, and also think about how those returns are going to look over multiple time horizons. So today, tomorrow, 3 years from now, 5 years from now, 10 years from now as well, and making sure that we have the wherewithal to commit capital to some of these strategies that might take a little bit longer to
And the further out you look into the future, that clarity muddles somewhat as well. So you talk about the illiquidity premium. What's a proper premium that you'd be comfortable with at this point in time?
Yeah, the illiquidity premium is one of those things that is elusive. It's almost impossible to actually figure
like the
out.
Neutral rate of the Fed.
People, people would tell you can look at the yield curve and see how that works. Obviously, it's inverted right now, so that might say something about illiquidity premium. But I think in general, when markets are at normal levels, you can think of it as basically the amount you should be compensated for basically locking your capital up for the long term.
Public markets, you talked about the U.S. You're looking to diversify away from North America, for example. So what in Asia looks attractive to you?
Lots of things in Asia look attractive. So from a country perspective, Japan is obviously interesting in many ways. I think there is a bit of a reflation story that's happening that's driving corporate profitability and wage growth. There's also a corporate reform story, which I think has a lot more legs to it than ever before. The government is a lot more committed to it. I think corporate management have found the wherewithal to drive a lot more of these changes as well, and I think investors are excited about that. India is exciting in its own way. It's had a good tailwind from a supply chain realignment. It's got good relative political and policy stability. I think their valuations are always a little bit more of a challenge, but at the same time, there's been strong investment flows that I think are driving some of that too.
Okay, I was waiting for you to mention China. Okay, what comes to mind when I say the word China?
Yeah, China is it's a little bit of a challenge story, I think. There are debt deflation dynamics that are a bit of an overhang from the real estate challenges that they face so far. There are long-term, I think, demographic challenges as well. Although, to be fair, that's not unique to China. I think the rest of the world faces those challenges too. It's just a matter of degree and time. There is obviously the cloud of geopolitical tensions, the ebb and flow of that drives political and policy instability. That makes it just difficult to reassess the macroeconomic opportunities, the real economy, and how that's going to play out in China. And of course, investment access, depending on where you come from, and how well the government-to-government relations can be at a point in time.
It's not just about valuation, is it? Otherwise, this market would have rallied substantially. What do you need to see to be more comfortable to allocate more, or even allocate at all?
I think if you think about it from a policy and macro perspective, I think the recent budget deficit expansion is a good indication of the government's policy support for the economy, which I think can be exciting in its own way. But again, the investment access is a little bit of a challenge, and some of that geopolitical tensions, to the extent that they can unwind, I think would be a much better signal for many global investors to feel a lot more comfortable to be able to invest in China the way perhaps we all aspired to just a couple of years ago.
Well, do you expect to increase or decrease allocation at some 24-month window?
To China.
To China.
In particular? I think we're open-minded about China. It really depends on the situation. We haven't reduced our exposure to China. We've really been maintaining it and slowly thinking about how better to access the market, if at all.
What about hiring? Manpower complement. That goes almost hand in hand with where you want to be exposed, isn't it?
Absolutely, absolutely. I mean, we set up shop in Singapore. It is our only Asian office. Okay. I like to joke that we've grown, 33% and 25%, but basically we went from 3 to 5 people. Okay. But I think we're looking to grow that presence over time. The way we think about it is there are opportunities here we like to access, and it's not just China, it's Japan, again, it's India, it's Korea, it's Southeast Asia. Really looking to do more here, and as we find those opportunities, as the capital starts to flow, we'll think about the resourcing and making sure we have people on the ground to do that.
There we go. Well, 5's enough. I don't even have 5 friends. Kevin, nice to see you. Kevin Bong there, Senior Managing Director, Chief Investment Strategist, Head of Singapore at AIMCO there, of course. Right, coming up here, so we'll take a very short break, as you probably can hear right behind me. It's a bit noisy. We're on the break quite literally from some of these conversations taking place here. So coming up shortly is CATL. We'll be talking all things private equity, particular as it pertains to real estate. And in the next hour, of course, we'll be circling back, why not, to private credit. Stay tuned for all of that. Yvonne, back to you.
Yeah, we're taking a look at when it comes to what markets are doing. It's really that what we're seeing in renminbi, what we're seeing yen here this morning, at least a second day of strength coming through for the offshore renminbi. We're still holding around 724 levels. Is there momentum behind this reversal? Is certainly one thing that people are asking, just given the fundamentals as we talked about. 151.33 for dollar yen here as well. So at least we stabilize a little bit. Take a look at where we're going. It's really benefiting the likes of the Aussie dollar, what we're seeing with the renminbi here today. You take a look at how we're looking at when it comes to the Kospi. This is one of the clear outperformers among the Asia region here this morning. We're up more than 1%. It's really what we've been seeing with the chip stocks. So Samsung, SK Hynix, look at that. It's up some 5%. Micron, that certainly led to some inflows here into the tech space and the chip space. SK Hynix, get this, market cap is now reaching $100 billion market dollars, $1 billion, I just say, in terms of market cap. And we're watching some of these financials, some of the automakers here today. There was reports of a potential reduction in punitive taxes for firms increasing their dividends as well. We've got plenty more ahead. This is Bloomberg.
Hong Kong has been an international financial center, and we can continue to be an international financial center. And we have a lot to offer. Like, for example, apart from financial professional services, we have a vibrant society economy, and also we have a very vibrant art scene, as illustrated by the presence of Art Basel and many art events. So what you can see in Hong Kong is a very vibrant cosmopolitan, epitomizing what Hong Kong has been and continue to be.
That was the Hong Kong Secretary for Financial Services and the Treasury, Christopher Hui, making his pitch on why Hong Kong remains that international finance hub. Meanwhile, we talk about what's been going on in this property market, right? So we started to see weeks of surge in property sales, volumes and the like here after, of course, the city did drop those cooling measures, or I say those curbs. And so the secondhand market, though, you take a look at what happened, though, that's starting to see some signs of cooling down after that brief rebound. So you take a look at what Centerline is saying here right now. The property agency reporting saying that the 10 biggest residential estates posted 19 transactions over the weekend. That was a 32% drop from a week ago and marks the second decline in a row. Now, local authorities scrapped property taxes last month to boost those sales. So where are we? Right? Hong Kong property tycoons are also looking to capitalize on home buyers ready to ramp up their purchase plans over fears of price hikes. Let's bring in our Bloomberg opinion columnist, Shirley Ren, joining us now. So, buying apartments seem to be a bit of a weekend pastime for a lot of Hong Kong after these measures were removed. What do you think is going on here?
So the property developers, they are taking a very aggressive approach at selling. For instance, recently there was a project in Kowloon. What happens with the payment plan plan is you only need to put down 5% deposit, and you don't have to pay the rest 95% until the project is delivered mid next year. So a lot of people are taking it as a call option. Basically, I'm 20% levered, and I'm only putting 5% down. If 1 year from now Hong Kong property market is not recovering, I can just walk away and forfeit that for 5%.
Is the market getting heated in your eyes then?
I think on the primary market, yes, because the developers, they are selling very aggressively, because we all know Hong Kong banks are kind of aggressive. They're kind of very cautious these days, right? Yeah. And the developers, they need to show that they can actually sell projects. So in that sense, primary market is heating up, and there is plenty of demand. But as you just mentioned, the secondary market is not doing well, right?
All right, we'll see how this demand picture looks like here. Shuli, thank you. Our Bloomberg opinion columnist, Shuli Ren. Talking a little bit more about Hong Kong property here today. Let's get back to our coverage of the inaugural Milken Institute Global Investor Symposium. David is standing by with our next guest. Dave.
Yeah, Yvonne, we might be able to draw a direct line between that conversation you guys were having with Julia, at least as it pertains to broadly the concept of real estate. But really have a look at what it pertains to the private markets. Has really been a hot topic of late, particularly the last 2 years or so. Let's bring in our next guest here. Of course, joining us on set is Goodwin Gog, Chairman, Managing Principal, and of course Co-founder at CATL Partners. It's nice to see you, and good morning.
Good morning, David.
I know you're the real estate guru in the house, and people gravitate towards you just watching you walk around here. I'm wondering, it's such a broad topic and concept, real estate. What are you guys busy with specifically? What is your investable universe looking like, particular right now?
Obviously, interest rate is not a friend of real estate, so there's a lot of disruption in the world of real estate. Certain markets have reset much quicker, U.S. in particular, because of the reset mechanism built into the banking system, recourse debt versus non-recourse debt, that allow prices to reset the market, to allow transactions to unthaw, right? Liquidity to come back to the market, which we're starting to see happen. In Asia, in particular, the banking reset mechanism is not quite there, so prices don't reset as quickly. So the distress that people perceive as available is not quite there yet. So you have to actually look at alternative places. Obviously, the obvious place is AI-related real estate. Data center is the easy one. But contrarian office play in places like San Francisco, Seattle, where the companies of tomorrow that are going to displace jobs to make people more productive, likely will be based or built out of those cities where the talents are. In Asia in particular, obviously, the housing market in Hong Kong seemed to have found a bottom now that all the stamp duty, all the artificial restrictive measures have been removed. That's, I think, bringing money on the sideline back to the market, saying this is the floor. Supply demand still favor the demand side in Hong Kong housing in particular. China is a very different story. Right? In China, when you have 20% housing price correction in the secondary housing sector, that's a 350 trillion RMB value, right? And then when 60% of the household balance sheet wealth is tied to real estate, I mean, 20% of 350 trillion is 70 trillion of value. That will take, 10 to 12 years or 5% GDP growth just to make that up.
Right, off the table.
And that's off balance sheet. As a result, people are not spending. So other than investing in growth sector like data center or looking for distress,
well, okay, there are a lot of distressed assets. Mainland developers, for example. Are you active, whether that's onshore or is it more offshore you're looking at, if at all you're busy looking at some of these assets?
Those are much harder, right? Mainland developers, onshore assets are usually pledged to Chinese banks. And the banks take a lot of time to work out their problems, work out the trouble assets. And they don't, unlike US banks, they don't just take the asset market to market and dump them, right? It works through an orderly process. It takes many, many years. And so that's actually much more, you kind of have to be a state-owned developer, a state-owned banks to play in that sector. But many of these distressed developers do have assets outside of China. And those are where we could provide short-term financing, we could provide bridge financing, we could provide liquidity to them in US dollar or non-renminbi currency to help bridge the liquidity crisis.
Well, you could. Would you?
We would. provided it's offshore assets, right? So that's where I think in a way a segue into private credit.
Right.
Why private credit has been such a strategy for us as other many shops, because all of a sudden you got the big banks absorbing smaller banks, but the big banks tend to be more conservative, so they're calling back many of the loans, creating a void in the market for high quality real estate, not very high leverage, but where there's a sponsorship issue or whether they just want to reduce the loan book or reduce the exposure, creating high quality assets that private credit can lend at equity-like return, but with debt-like protection. It's quite unusual, and this time I think the cycle is going to play out quite a bit longer.
It's a relatively new asset class. Let's say give or take 10 years, private credit, right? And what happens if we enter a recession, for example?
Well, real estate is in a recession already, right?
Okay.
So
it can get worse.
I think private credit has been around for a long time, but private credit previous definition are more mid-market, mid-market firms, corporations. It takes a lot more understanding of the business to make the lending. Right? Private credit for collateral-backed real estate has been more of a more recent phenomenon, I would say, especially in Asia, because Asian banks tend to be quite cheap. Asian banks tend to lend relatively high leverage because they like collateral-backed loans.
Right.
But with this interest rate cycle where we are, even very low leverage bank loans are quite expensive. So the extra percentage we need for private equity to play private credit, all of a sudden it's not so scary anymore when liquidity is actually not available. By and large.
There was a lot of money raised as rates were moving up quite rapidly, and do you think that money is forced to find yield in the years to come?
That money will be forced to find deals, but then the credit market is very large. It's much larger than the equity market, right? So there's still a lot of deals available because as long as the banks are still consolidating among themselves or reducing the exposure to risky assets, which many of them deem real estate to be riskier than before.
Right.
That void will always be there, and that void is significantly larger in credit than in equity.
Okay, final question. You talked about AI, your plays in office, which is quite curious. You could talk a little bit more about that if you can. China plus one, I mean, what other things are you busy with, and where are you looking in terms of assets across the region?
Obviously, within Asia, the China plus one is very interesting to us. I think Vietnam has been a big beneficiary of it.
Still?
Still a very big beneficiary because, first and foremost, India should be very interesting. But I think one thing that's hampering India a little bit is they are less welcoming to Chinese factory owners opening factories in India to take advantage of the labor to produce goods to sell export. If you are a U.S. buyer, it takes a long time to qualify a vendor. Right, so if it's a brand new Indian manufacturer, it will take some time before it gets into the vendor list. Whereas a Chinese existing factory owner opening a factory in Mexico, opening a factory in Vietnam, if they can open a factory in India, of course it would be great. But they're going to go to where it's easiest for them to open factory, to take advantage of local labor, to get around the tariffs. And India, it's more difficult compared to Mexico and compared to Vietnam.
Okay, very quickly, in Vietnam and Mexico, you expect those two trends to continue?
Absolutely, for quite some time. As long as there's geopolitics between China and U.S., that China plus one trend will continue for a very long time.
It's not all bad, right? As pertains to geopolitics, opportunities arise. Goodwin, it's nice to see you. Thank you so much. We could be here for a long time, actually. Let's do this again. Good. Goodwin there, of course, Chairman, Managing Principal, Co-founder at CATL Partners. Right, we'll take a short break and we'll be right back. Check on markets, how we're doing this Tuesday. Plenty more ahead. Good morning, by the way. You're watching The China Show.
All right, take a look when it comes to some of the movers across the 8 shares here this morning. We're still seeing some decent bid here across some of these China-listed or Hong Kong-listed Chinese companies. And China Merchants Bank is the clear outperformer here after their earnings were beat there. That capital ratio also, I should say, the dividend payout ratio was also a nice surprise. Baidu also up some 5% with Sunny Optical on the flip side. They're down some 3%. That's it for us here, The China Show.